Step back and see the macro and digest it down to the micro. Trading, investing, and geopolitics from macro down to the micro. Welcome to Macronomics.
Welcome back to Macronomics, guys. Today, wow, we just tried something new, man. It was so new that we had to, it was a lot. And so today's episode is just going to be about something we tried and just our experience with it, and so you can extrapolate what you'd like. So come on, pull up to this buffet and let's grab a plate. So I was placing a couple trades, and as you guys know, I'm usually trading the higher time frames, the 4-hour, the daily, and the weekly. And I'm really looking from the daily, looking for the 4 and the weekly to confirm. And I tried something a little new today. I said, you know what? I put a position on with the pound and the dollar, the US dollar, and position went against us automatically, so we didn't want to sit and wait. Like we talked about a couple weeks ago, we cut our trade. We didn't need to wait, so we just cut it. It wasn't the right time, so we cut it. And then we seen something on Euro USD, and just from experience, I've noticed that these two markets are correlated. So I'm looking at Euro USD. I'm like, this could be a good position. And so I hop in, but this time I load up on pip value that's way above my usual, right? Way above, like 5 times more. And I did this to see, okay, let's see if I can break into this position. Let me see if I can break in the position and what can happen. And so long story short, I do that, and about maybe not even 15 minutes later, we was in profit, and we was in profit by usually what we usually trade within our dailies. And so we just decided to take the profit. And here's what we've learned from this experience. This type of trading, we feel like, would be best suited if you are in front of the computer. Here's why. For me personally, I was risking a lot. I was also, risking a lot to make a lot. But I feel like with this type of trading, if you can monitor, not consistently, but like periodically, like every couple of minutes, monitor this position, then you can see an opportunity. I mean, not an opportunity, you can close the trade. So we was looking for the trade to go against us. And if it did, we was going to close it. And it did initially, and that's why we stopped watching it. But then it was able to push back down, because if you're watching the trade and you're seeing it go up and down, it's too much emotionally. It's draining, honestly. And so I decided to close the window, and I went ahead and did my chess routine, played a couple blitz matches. Also, if you love chess, check out our other podcast, Chessology, and add me on chess.com if you want to play. Just message me and I'll send you the info. But anywho, we decided to play some chess, and it was refreshing to not watch it, but then it just taught us a different avenue that we could explore. Now, we like the daily form of trading, right, where we check in every couple hours and whatnot. But this type of trading, we also seen a little bit more active. You have the potential to create another stream, so to speak. And so, we're definitely going to explore this. For us, how we're going about it is, instead of me placing the trades later, like I have a whole routine when I get on the computer. I research some articles, check emails, do some tasks, check, some of our stocks and our investments. It's just a whole process, and then we usually do our trades last because we're setting it on the daily. So what we're thinking is to switch this process and do our trades first, so that whole hour that we're on the computer, if we can find a trade setup, then we can take it. Finding that trade setup, and then, by the time we're done at the computer with our natural routine, then we can we can simply switch. I mean, not switch, we can simply close out the positions if there's none, or move to break even and let the trade run. But overall, guys, this is something I'm definitely excited about exploring. I probably wouldn't be as excited if the trade was to have gone heavy against me, but now I see the potential. Yes, you got to be aware of the risks, but also the upside is pretty great as well. And so that's just something personally that we're going to explore because, again, most of our trading has been, on the daily approach, and we still love the daily approach just because it's powerful. But I think, remember the book we was talking about, Best Losers Win by Tom Hugart? He trades on the 5-minute chart, I believe, and I'm pretty sure that how he's trading is more active, like this type of style. And it was cool to experientially see that and be able to take those concepts that we've been learning and put it into practice. Because I think it's still applicable on the higher time frames, but definitely on the lower time frame. Because if you get the trade going against you early, especially if you have a high pip value, then you want to cut those losses early. And then, of course, when you find the big one, you ride the hell out of it. But I didn't do that with this trade. I simply closed it just because there was no structure behind this trade. I didn't have any parameters, and so this was just to experience it. Now I'm already computing the parameters that I can lay around this so that I can go about it more effectively, such as when to get in, like the beginning of the time of our structure, all that good stuff. Whereas with this, it was just in the moment. And there's nothing wrong with that, guys. There's nothing wrong with just trying things. But as you move forward, definitely having a structure in place so that you can start to see the parameters that the instruments flow within. Like the pip values. Is there a problem with the pip values? Is it the time frame? Like whatever the parameters are, you have to be able to identify it. And if you're sporadic in your approach, you're not going to be able to identify the foundational reasons behind whether the trade is winning or losing. And so that's why I feel like consistency in that approach. But see, here's where that goes out the window. But the other side of the coin is with the spontaneity, you have the opportunities to learn stuff. So like this trade today, it was a spontaneous trade. I've learned a lot, and now I can incorporate it and learn from it. So there's nothing wrong with being spontaneous, but that shouldn't be your regiment. That shouldn't be how you trade. If you want to experience and try something new, you've identified your risk, you think it's some great reward, then of course try it. Try it, but understand what you're getting into, and then whatever you learn from that, be like going into it with a learning mindset so that you can bring back value. Whether you win or lose on the trade, or rather whether you're up or down on the trade, because you never lose, you're always winning if you're learning. Whether you're up or down in the trade doesn't matter if you're going to spontaneously go off on trying something new. What matters is that you take back something from that experience, and that's what happened today with this current trade. It was spontaneous. We don't plan on doing this randomly, but we do want to explore this avenue some more. And so since we want to explore it, we're going to go ahead and put some parameters around it so that we can understand those blocks that are contributing to the trade, whether it's winning or losing. So that's going to be it for today's episode, guys. I hope you enjoyed it. Again, this was just a simple insight into that trade. Yes, the best losers wins, guys. I don't know if I said that again, but yeah, Tom Hugart's book. Check that out. Again, it's a great book. So with that, I will talk to you guys in the next one and continue to put the micro or the macro. Continue to see the micro in the macro and keep piecing it together. You guys also might be hearing this late, but there's a Fed meeting this week, and there's a lot of talk of another rate hike and whatnot. Just be aware of this if you have some trades on now. You're probably hearing this late after it. So I guess the macro overview of the environment right now is bonds are down. Bonds are up. Stock market is taking up slowly, but don't get lost in none of this, guys, because a lot of A lot of the politics of these hierarchies, so to speak, they do affect the markets. So make sure you're being aware of that if you're placing any long-term trades, or not long-term, but rather weekly, even daily trades, because you can get stomped out of position. That happened to me last week. It was the CPI came out, and I had two trades on that actually jumped to profit. You know, huge pip value, but I actually had a low pip value on because I wanted to scale into the position. Two trades went into profit, one trade completely lost, but it was a huge move. The pip value was at least 100 pips, and that's just from the CPI being printed. So be aware of that, continue to be aware of the macro, and piece the micro together. So with that, guys, I shall see you in the next one.